To be honest, I've been telling everybody buy now if you can. I know we've covered it quite a bit, but just while rates are low and that buying power is so much higher, if you can buy right now with a 3.25% interest rate and buy a $300,000 home versus a 4.25 at 265 in Utah County, that's a big difference. 265 versus 300 is a huge difference.
Town to single family home, yeah.
Yeah, and for the same monthly payment, if you can take advantage of that.
Great. Welcome to our video today. I'm very excited to have Taylor Hendricks here with us. Taylor's a loan officer. We work together all the time. And with what's been going on right now, there's a lot of things that have to do with mortgages. And I just wanted to bring Taylor in here and just hammer all those details out so you guys can have access to that information. And also provide him as a resource. You can call him morning, midday, night. I'm committing him to answer all your phone calls regardless of the time of day. That's a joke. But for real, feel free to reach out to him or to me, and we're happy to go over any of those questions. But welcome, Taylor.
Thank you. Appreciate it.
Right.
Well, good to be here.
So let's talk about it. Let's talk a little bit about what was going on a little bit pre-coronavirus and kind of where the market was heading and what was going on with rates.
Yeah.
And then what's going on right now. And let's just kind of follow the timeline from there.
Yeah, for sure. So rates, I'm sure as most people have heard, especially I get questions all the time about some people saying that the Fed lowered their rates to zero and all that and wondering what that means, where rates are. So it's a common question, I'd say definitely daily. But rates right now are very low, extremely low, and they have been for, I'd say, probably about a month and a half. We've seen some of the lowest rates in history, which is good. And a big reason for that is we've seen just a lot of uncertainty in the market and all that. So the government's been trying to help pitch in, keep real estate going with low rates and all that. And we've seen that a ton. And so coronavirus has definitely had a big impact on that and really how all that works.
And so what was going on before the coronavirus? We were still looking at pretty low rates before.
Yeah.
What were the trends that we were kind of looking at, before that coronavirus was a factor?
Yeah.
And what are the trends that we're looking at now that it is a factor?
Yeah, so it's actually really interesting. Before the coronavirus hit, I saw a lot of statistics saying even some experts were expecting that in 2019 alone, rates were going to jump up to over 5%. A lot of people were expecting because the economy was so strong that they could handle that and everything was going to be fine with that. And so we kind of been in an upward trend slightly, not crazy. I'd say pre-coronavirus, we were probably rates in the high 3s, low 4s, and I think slowly trending upwards, but nothing major. Again, just because the economy was so strong and it could handle it. So that was pretty consistent that we'd seen for, I'd say, a few years. There wasn't anything major. And then as soon as the coronavirus hit, that's where, as soon as there was uncertainty, job loss, and a lot of other things, the government, a lot of economists I've heard say that, I'm sure you can probably attest, that if the real estate market does go down, or if people stop refinancing, buying houses and all of that, we're in for it pretty bad. And so that real estate economy is one of the things that's really going to keep us going. So that's where they were trying to lower rates and really continue to grow that since it hit.
It is. It's an interesting topic, and honestly, I'll take credit where it's due. I wasn't involved in this, so I can wash my hands of it. But really, it was the real estate market. It was the mortgage industry. But what was going on there, that was what caused the Great Recession, right? And that's where every time anyone thinks of recession, they instantly think of the Great Recession, right? But they don't realize we've had a lot of recessions since, before that weren't nearly as strong and nearly as heavy. Yeah. But we were at the forefront of that, and we were the ones that they'd imploded upon. Yep. And we got beat up pretty good. And anyway, you can watch my last video of why this is not 2008. But just skipping over that, what's projected is that our industry is actually going to take and lead us out of what's going on in the coronavirus. And I'm excited to be involved in it. Right?
Yeah, absolutely.
So, and let's talk a little bit about it. You said that the economy was going up, that people could handle the higher rates. Yeah. What does that mean for your everyday person? It's just, kind of maybe if you can go into, hey, it's historically when the stock market's doing well,
Yeah.
mortgage rates drop a little bit, and just kind of how that works.
Yeah, for sure. So again, I mean, we've seen a huge example, probably more exaggerated example of it recently. But as the stock market is doing well, a lot of times you'll see rates go up a little bit. And again, it's just because they can handle it. And then as you do see uncertainty in the market, you'll see that rates will drop to try to continue people wanting to buy and refinance. I did see it was very interesting as far as that goes, that is in terms of buying power that you can have. That it was, oh gosh, I looked at the statistic just before I came. It was
305.
I think it was 3.25. Yeah, okay, so yeah, that's right. So I ran some statistics before, and somebody that was buying a house for $300,000, if your rate was 3.25, it was the same principal and interest payment as somebody with a 4.25 interest rate at $265,000.
Wow.
So there's a $35,000 spread between the two, literally just because of an interest rate. And so I think as well, a lot of people are trying to give, with these rates being lower, obviously it's going to lower a monthly payment or give somebody more buying power for something that they are looking for.
So buying power, let's go into that and what that means for your everyday person.
That's right.
I understand, right?
I was going to say, yeah.
We get talking and sometimes I get going and I'm like, I don't understand.
It's the mortgage lingo.
Right.
Yeah, I get you.
So let's go into what buying power means.
Yeah, buying power is when you're looking to go purchase a house. It means that, for example, if you qualify for up to $250,000, that's typically your normal buying power. Now, if you add, let's say you add a cosigner or you add somebody else that's going to help give you more income, if you can qualify for more and they allow you, with their income, you can qualify up to $400,000. That really is just adding that cosigner is giving you more buying power, more than anything. So it's just really how much leverage you have or how much you can afford with your income and your situation.
And buying power is determined on your debt to income ratios, correct?
Correct. Yes, it is. Yep. So you have your debt to income ratios that vary just depending on every loan, but you're seeing typically debt to income ratios of like a 45% on average. So if somebody's making $10,000 a month, it's about $4,500 a month that you can have on a house payment. That's $10,000 gross on that.
Great, good deal. So I think that definitely helps, right? So before coronavirus, we were seeing an upward trend of rates were looking like they were going to inch their way up, and then right now we're at a pretty historic low.
Absolutely.
What do you think is going to happen once we've recovered from coronavirus? I mean, Goldman Sachs, Wells Fargo, a lot of JP Morgan, they're predicting we're going to see a V in terms of, we saw the stock market take a big dip. We saw a lot of unemployment. We saw a lot of things that went in and made that take a big dip. And what they're predicting is that to take an equally big recovery, right? Yeah. The industries that aren't going to recover as much as, unfortunately, a lot of the industries like the mining industry, they've been on the decline for a long time, and this just kind of gave a big push there. But a lot of industries are looking to recover from that. So if that V takes place, what are the projections of what mortgages are going to look like in the future?
I think a big part of that depends on where the economy goes. Most people that I've seen have said that they're expecting that mortgage rates are actually going to stay in these low periods, probably mid to low threes, for at least the next 6 months. More than anything, again, it's just to continue that, just really trying to push everybody to be active in the market and buy, sell, refinance. I think if the coronavirus goes away a lot faster than we're thinking, if the economy does get stronger than we're expecting, you probably could see a bigger increase in rates. But from everything that I've read, everything that I've seen, it's really hard to know just because of how uncertain everything is right now. But everybody's expecting they are going to stay pretty similar in those mid to low threes for at least the next, I'd say, 6 months to a year.
Perfect. And let's go into something that is very real for a lot of people and what's going on right now. Let's talk about the options for people have in terms of forbearance on their loans, right? Yeah,
for sure. So, and honestly, I get this question probably, say, 3 or 4 times a day, just on...
Well, now it's 4 or 5.
And now it's 4 or 5. Yeah, I get it a ton. Just a lot of people asking... if they lose their job, what do they have to do with their monthly payment? Or if they have lost their job, what happens? The government came out just a little while ago. I can't remember the exact day, but they came out a month or 2 ago just explaining forbearance. meaning that you can basically, in a sense, almost take a break from the monthly payment for a time and just try to get back on your feet. I've had a lot of people think that means free mortgage for a while, or you just get to live free. That's not the case. There are some strings attached, but it at least will, anybody that doesn't have a job or lost their job, it will give them, right now it's been 6 months. You have 6 months where you can take this time off. I've heard it could go up to a year depending on where, just kind of what the future holds. But it's, as of the moment, about 6 months that you have to be able to try to recuperate and go from there. So
let's talk about the different options that people have, right? I know we can't talk about every bank and every institution because there's so many.
Yeah.
But I've probably seen 3 that are the most common structures. Do you want to go into those?
Yeah, for sure. So the structures, the biggest ones that we've seen are the first one would be, let's say you take 6 months off. It is literally just a balloon payment the day you start your payments again. So that one to me is a little scary. I'm a little weary of that one because you have to make all those payments at once, but that is a pretty common one that I've seen. Some other people will require that, okay, look, they're not going to require all 6 months up front, but they're going to break it out over the next 6 months to a year in your payments. So your payments will be higher just to compensate for having the lower or having no payment for the moment. The other one that I'm a big fan of for those that allow it is that they'll even just tack on, let's say you do skip the full 6 months, they'll just allow you to tack that on to the mortgage at the end. So you can go ahead and basically push your mortgage 6 months longer, but at least you're not having that huge burden of paying it back immediately or even having higher payments for a year to try to make up for what happened.
Are there any, that's honestly, if possible, that is by far the best option.
Yeah. I
am also very wary of the balloon payment. I mean, if your monthly payment is $2,000, then all of a sudden you have to pay $12,000 in 1 month, which is very scary to me.
Yep.
But and then having it wrapped up, I mean, short, right? If you can make your payments, make your payments. But let's talk about that. Is on those options, is there any negative? I mean, obviously it's attached onto the back.
Yeah.
But is there any other cons that are associated with that?
Specifically for every borrower, like individually, they're not a ton. I mean, you're not going to be affected. Your credit's not going to be affected and all of that when that happens. If you look at the large scale, absolutely. There's a huge effect going on within the entire mortgage industry on that, but the individuals won't see it. Mm-hmm. So, and that, if you want, I can even go into that as far as that big effect.
Perfect.
I know
transition.
You love the statistics.
Perfect transition. Let's get into it.
Yeah. So what we're seeing right now, and it's specifically with government loans. That means, I'm sure a lot of people probably heard of them, but FHA loans, VA loans, and USDA or rural housing are the ones that are probably taking the biggest hit. And what happens is on the back end of everything, if somebody decides not to make their monthly payment, the investors, the people that really are funding this loan, still have to get paid. And that means that the person that has their loan has to basically make the payments for them. Now, if the person that wasn't making their payments defaults in the future, the company that was paying that money will get reimbursed. Or as we talked about, if that person gets their job again and they're back on their feet, they are going to pay it back. But it's really, this company is kind of having to advance this money, these payments every month for just because those investors have to get paid. And it's causing a lot of issues within those government loans, the FHA, VA, and rural housing. What a lot of investors have seen right now is they're saying, and it makes sense, but they're basically saying, if they're taking on a loan and there's a risk or a chance that they're going to have to make these monthly payments, well, heck, that doesn't make sense. It doesn't make sense to take on an investment and have to pay. So they will typically, right now you've seen all of these government loans, the rates are crazy high. Probably I'd say a month and a half ago, like an FHA rate on average was anywhere from 3% to 3.25, so crazy low. I even had some in the 2s, but right now most people are in the 4s or 5s just because that risk is so high. So, and actually, can I read a quote real quick?
Of course.
Got a quote that was awesome. I was reading this a little bit earlier, and I thought it was really interesting just to show what could happen that if people don't make their payments, just what it'll do to the mortgage industry in general. But it said right here that, let's see, it said the Mortgage Bankers Association, this is on just our website where we use to track the rates and everything else. It says the Mortgage Bankers Association has determined, get this, if just 25% of borrowers opt in for this program, or basically they decide to not make their payments, it will cost between 70 and 100 billion for the first 6 months. And then obviously double that if it extends over the next, if they give it another 6 months, it'll be another 70 to 100 billion. So the big effect that we're seeing on that is basically that companies can't afford to just blow 70 to 100 billion right now, and so it could cause issues with them in the future.
Chump change.
I know, right?
Right. Well, I think it's very good. Anyway, what I like to see is the mortgage. I forgot what it's called, but it's the mortgage something index.
Okay.
That talks about the easy, how easy it was to get a loan, right? In 2005, 6, like it was crazy high. I think 900 was the number right around there.
Okay.
And now that we're closer to about 80, right? And we just took a bit of a dip in terms of how easy it is to get a loan. So the higher it is, the easier it is, right? The lower, the harder it is. Which I think it makes sense. And I think, unfortunately, we live in a world where sensationalism is idolized, might be a word to say it. I mean, I'm a part of a lot of forums with a lot of landlords and with investors who invest in real estate, and that's kind of where they live and what they do. And as we were involved in that, a lot of folks were saying and thinking, okay, well, now that this is going on and that people can't be evicted for non-payment.
Yep.
They're saying, hey, a lot of these landlords were following the media and saying, hey, they're not going to get paid and we're not going to make money and we're all going to lose our properties and we're going to see the biggest housing crisis ever.
Yeah. Yep.
Like the numbers on that were coming back, and I don't have exact numbers on here. I don't want to pretend that I do.
Yeah.
With all of my dad's units, I think he had 2 who weren't able to pay. But I mean, they're college students and their rent's like $250, so it's not detrimental for them. Yeah. And even those 2, I mean, they have someone who's a part of their church who's paying the rent for them. Okay. So with the amount of, and yes, he has a decent amount of properties. With the amount that he has, he's had 100%, pretty much 100% payment because those guys are going to have the church pay for him. Yep. In these forums, I was doing, I put up a graph on how many people were getting paid, and people would comment and they'd say, hey, here's what's going on. And almost all of them were like, hey, we're getting paid. If I had put percentages on it, and I don't have an exact number, but I'd say probably 85 to 90% were saying, hey, we're getting paid. Probably 8% of that were saying, hey, we're not getting paid, but we're working something out. Okay. So they're working something out internally, and they're going to eventually get paid, and they'll be fine. And it was only about 1 or 2% said that they're not paying.
Really?
Which is pretty low considering these aren't even mortgages, right? These are tenants. Yep. And tenants have a higher, statistically speaking, have a higher probability to not pay than people who have their mortgages. So honestly, I think it's good to do without so much sensationalism. It's a valid thing to consider, and it's always better to be caught prepared. Yes. And prepare for the worst case scenario. But go ahead and continue to live. Yep. But anyway, that's just a little bit of a tangent. But I thought it was worth mentioning because I saw it so much, and everyone's like, oh, these tenants aren't going to pay me, and no one's going to pay their mortgages. I'm like, I tend to believe in people a little bit more. I'm like, I think people want to stay on top of things. They want to continue to be contributing members of society. Yep. And go and do the best they can. Some people, they flat out, they can't, right? And it is what it is. But I think most people, especially housing, is the last thing on their chopping block, right? Yep. They'll cut out entertainment. They'll cut out eating out. They'll cut out sports. They'll cut out a million things before they'll cut out their housing. So I'm fairly optimistic with what I think it'll see things playing out. But what's your perspective there?
Well, I think it's actually interesting that statistic is exactly what I've seen, because as you were talking, I was thinking of all the calls that I've received about forbearance and all of that. I would say we'll say 1 in 40 of them have been, I lost my job and I don't know what to do. I need to get something figured out. And the other 39 were, a couple of them maybe had lost their jobs, but they had somebody that was going to help, just like you'd mentioned. And then everybody else was just more, what if? So I think it just falls along. I know you said 1 or 2%, so it's pretty dang close as far as the statistic goes. I've had one person that really just didn't know what to do. Everybody else has had backup plans or just, prepping for the future. So yeah. I totally agree.
And again, I think my speculations on what I think the future will be,
yeah.
A lot of it is based on what these bigger companies are saying. They're predicting a V, or worst case scenario, they're predicting a U, which is just a more elongated process. The big issues that we saw in the Great Depression and the Great Recession was an L. I mean, it lasted, it dropped, and it lasted for a really long time before it started to pick up. And same with the Great Depression, right? I mean, it just lasted a really long time. So the faster we can recover, the faster everything goes back to a relatively speaking norm. And this is, I want to give my advice to anyone who's watching this, because I think this is important. It's one of the most important things that I can say as we're talking about this, and I'd like to hear your perspective.
Absolutely.
My perspective on what the future will be in terms of the housing market here locally in Utah, specifically Utah County, which is absolutely insane. Right now, a good home that's priced right will still get 2 or 3 offers. Like, it's still competitive and things are still moving pretty quickly. But we do have a lot of people who are just kind of waiting in terms of buying a home. And spring is our busiest time of year. Maybe with summer, I mean, it's pretty close in terms of what gets busy. The summer tends to die out a little bit, but end of spring, beginning of summer is pretty insane usually. But because we've had all this backlog that's been going into it and the people who've been waiting, once we see that recovery take place, and I honestly think we'll see that in the next couple months.
Yeah. I
think we're going to see an insane amount of buyers hit the market. All the sellers who are waiting are going to have that there, and it's going to be super, super competitive. So my advice to anyone who's out there waiting is rates are pretty low right now. Your buying power is strong. Overall, I mean, you're competing against less people, so odds are you can probably get some concessions in terms of having them pay for your closing costs, getting other things like that done are very doable during this time frame. But I honestly think that if you wait another 2 or 3 months, once there's pretty much zero uncertainty, then you're going to be competing like you've never competed before. And us as agents, we're also going to be going through a crazy time there. So there'll still be opportunities and there'll still be ways to get your offers accepted. You have to strategize it and make sure you position yourself properly. But ultimately, my recommendation is if you can get things done the sooner, the better, because we're in for a little bit of a wild ride once this is over.
Absolutely. Yeah,
what are your thoughts there on a mortgage perspective?
No, I totally agree. I think right now it's knowing right now, okay, rates are low, not as many people are buying, and I think that's a really good point that your offer, you're going to be able to negotiate significantly more right now. Heck, if you can do it, go for it now, just because we know exactly where rates are and we know, your buying power is high. And I just think in the future, while I think we speculated, talked a lot about what is projected, no one really knows. And so if you can take advantage of it while you can, I've told everybody, I guarantee you refinancing a 3.25% interest rate or even 3.5 or anywhere around there, it's never going to happen. I really don't think so. And so why not take advantage of that when you can, just when it's here at the moment, as opposed to holding off and waiting and then, going right in the middle when everybody else is doing it. And I think it'd be quite a bit harder for sure.
Yeah. Bill Gates tends to say something. No, not Bill Gates. It's Warren Buffett. Ugh. But Warren Buffett tends to say this, and he says, be greedy when everyone else is scared, and be scared when everyone else is greedy. So I do think that there's some good opportunities while folks are a little more concerned. Again, not to say, hey, go out and go, and high pressure, whatever. Do what you think is best. But I want to give you guys my earnest opinion of what I think is going on in the market. I know you had prepared a couple other things. Was there anything else that you specifically wanted to talk about before we get into speculation land?
One item that I think is probably just one thing is it's very good. As we were talking about rates with those government loans and everything else, most companies are showing higher rates at the moment due to those, and so that's one thing to keep in mind. Intercap is actually, it's very cool. We're one of the only companies that is a little bit different and structured differently with that. Intercap it's one of the coolest things just to be with a company that is thinking so far forward. And so I give props to the higher ups that looked at this, back in January and said, okay, what can we do about it in the future to make us extremely competitive? And so Intercap decided we keep a lot of our loans in-house, meaning if you do a loan with us, there's a very high likelihood that you're going to be paying directly to Intercap. A lot of other companies are going to sell it off, or you'll be making payments to you don't really know who. And so it's really good where I can help take care of clients even after the loan's done. I can work with them then. Intercap decided to go through and said, hey, you know what? Everybody else is kind of taking higher rates on FHA loans right now. We're going to go ahead and we're actually just going to kind of control that market a little bit more. We're going to control the rate as well. So most people, like I said, you're probably 4% at least on a rate with even good credit on these. Right now, our rates are, I just pulled one up for somebody. It was a 700 credit score was 3.3 on an FHA loan.
Wow.
And it's just because Intercap is coming in saying, look, everybody else is kind of offering the higher rates. We're just going to take these loans, fund them ourselves, and we're going to control the whole transaction just to give better service, better rates, and everything else. So that is one good thing to keep in mind. A lot of people don't have that ability, but Intercap is one that's been very smart with how they've set it up to do so.
Yes, and that's honestly, that makes a big difference.
Huge.
Answer this quick question, then we'll enter into speculation.
All right, done.
So, what difference does 1% make? So, say for example, I'm buying a $300,000 home.
Yep.
And I'm looking at a 3% interest rate with, say, Intercap.
Okay.
And I'm looking at a 4% interest rate with whatever.
Yeah.
What difference does that mean in my monthly payment?
So, in fact, can I run it for you? Because I can go quick. I'm actually very curious on it. So let's see. So right now on a $300,000 home, you've got a 4% rate.
And let's just assume conventional financing.
Okay. So your principal and interest on 4% is $1,432.
And is that 5% down?
And that is, that's just on 300,000. So you could say your purchase price is 310, 315,
okay,
right
cool.
around there.
Okay.
And then if you do, so 4% is about 1430, right around there. If you do 3%, it changes it down to 1264, which is huge. That's a dramatic difference.
50, 60?
About, what is 12 or 14? What did I say? 1430? Yeah, $160 a month difference.
Yeah.
So huge difference in monthly payment just by being able to take advantage of even a rate that most people aren't able to give them. It's great. It's huge.
And most people are keeping their mortgages for how many years before they refinance or sell?
Say I've heard on average it's 7 years, somewhere around there.
7 years, yeah. So 7 years, 150 times, let's just say, I'm going to say 120 because that's easier math.
All right.
But you're, 15,000. You're looking at about $100,000, a little more than $100,000 in saving over those 7 years by having a 1% lower interest rate.
It's crazy.
Which is insane.
Yeah. So again, I mean, if you can take advantage of them, that's going to be monthly savings. That's going to be savings when I think it's savings all over. So take advantage of it when you can, for sure.
Yeah.
Yeah.
Actually, 100,000. That seems way too high. I think it's 10,000.
It's 12,600.
12,600.
Yeah.
Yeah. I was like, I think I added a zero. But yeah, that makes perfect sense. But now let's get into, this is more speculation, right?
Okay, let's hear it.
So, and I honestly don't think, I mean, again, going in a speculation world, our main video is essentially over, but for those who are interested enough, I think it's an interesting topic to talk about.
Okay.
There are certain countries, Denmark, Sweden, Norway, and a couple other countries who are now doing negative interest rates.
Yeah.
Right. The concept behind those negative interest rates is you essentially stimulate the economy by having more people have, it doesn't benefit them to have their money in the bank, so it forces them to have their money involved in the economy. But you're essentially getting paid to have a loan out.
Yep.
Which is, again, it's interesting. It's an interesting concept, but I don't think it's very sustainable Do you ever foresee the U.S. going to a place where they do negative interest rates?
I don't think so.
Why or why not? I guess why not?
Yeah. I would say no. I can see where in smaller economies where that may work. To be honest, I haven't done a ton of research on it, so it's interesting, but I was thinking about it a little bit earlier. That I just think in a larger economy, like a global, in one of the biggest economies in the world that's going to have that effect, I don't see it being sustainable. I think sustainability is going to be the biggest thing, just like you were saying.
Yeah.
Yeah.
I do too. And it's interesting. There's the big ones who preach this will happen, which I always say, if you want to know people's intentions, follow the money, and tends to lead you to a good place. There are a lot of folks in the cryptocurrency world who believe.
Okay.
they believe strongly. And again, I honestly think that cryptos, to be honest, I think it's a very, very interesting concept.
Yeah.
And I think there's some practical application if we get to a point where we can have enough trust in an outside entity that's not government affiliated to do something. But a big push for them is that crypto will be immune of that, especially if we come to a point where we have negative interest rates. But I think it's fun to talk about, but I don't think it's going anywhere.
No, it's an interesting concept for sure, but I don't see it. I don't see it anywhere in the future at all.
Good deal.
Yeah.
And then the last little thing I wanted to talk about is what are your, I guess, closing remarks on what you'd have to say in terms of what's going on with the mortgage market, and any last little tips that you'd give folks right now?
Yeah, I would say personally that I've been telling everybody is, to be honest, I've been telling everybody buy now if you can. I know we've covered it quite a bit, but just while rates are low and that buying power is so much higher, I mean, if you can buy right now with a 3.25% interest rate and buy a $300,000 home versus a 4.25 at 265 in Utah County, that's a big difference. 265 versus 300 is a huge difference.
Townhome to single family home, yeah.
Yeah, and for the same monthly payment, if you can take advantage of that,
and I'm going to cut you off. That's not even including your HOA, because HOA you're looking at $150.
Yep.
And then your monthly payment's going to be $150 lower buying right now with good rates, as it probably would be in another 3-4 months, 5
Absolutely.
months. And then you have to pay an additional $150 for a lower purchase price, which is very interesting.
Yeah, no, for sure. And that's exactly it. So I think it's more, if you can cut out the what if and it's possible, or if you've been on the fence, go for it. I mean, there's really, I don't think I can think of a better time. This will be one of the best times to buy, take advantage of some of the uncertainty in the market, take advantage of the best rates, take advantage of prices, I think, before they even go up higher once this is all over with. If you can, I would highly, highly recommend it.
Yeah. I was looking at the stats between last year. In March is actually pretty normal. We started to see Corona affect it.
Yeah.
But in terms of sold prices, it didn't really affect it because most of those homes were under contract before Corona got big in the U.S. But the average home price was, I think, $305 in Utah in 2019.
Okay.
And it was $340 in 2020 in March.
Wow.
So in 1 year, that's close to 12% appreciation.
Yep.
Which is absolutely insane. Zillow was predicting we'd have 7%. I was actually predicting we'd be closer to 5 or 6.
Wow.
Which I was wrong. It was much higher than I thought it would be, which I like to be on that end of wrong.
Yeah, I get you.
When I was conservative and it did better. And I think we're going to see it plateau a little bit throughout this uncertainty, but I definitely think we're going to see a bit of a sharp curve, and we're going to continue to see it back on that trajectory that it was at before. There's just too many factors, in terms of our population continuing to increase. We still have very strong businesses that are taking place here.
Yep.
We have a very highly educated populace in terms of having big universities that are here and contributing to the economy. Anyway, there's just a lot of things that this can be a whole nother video talking about why I think Utah will do very well. But overall, I'm excited for the folks who act now, and I'm excited for the folks who act later as well. Ultimately, real estate's a fun place to be. And if you guys need anything, feel free to reach out to Taylor. I appreciate so much you coming in and giving us your insights. And again, if you need anything on the mortgage side, Taylor's there. Intercap's been great to work with. And if you need anything on the real estate side, I'm more than happy to help. And I'm happy to help even if it has nothing to do with real estate. Feel free to reach out and we'll gladly connect. Thanks again so much, and I hope you guys enjoyed the video.